Welcome to Currency Live, hosted by me, Chris Harms, co-founder and chief business officer at BVNK. At BVNK, we believe the next generation of financial services will be built on stablecoins. Currency Live is all about the people and the projects at the heart of that shift. Today, I am delighted to be joined by Jackie Reeses, co-founder, chair, and CEO at Leadbank, a CNBC Changemaker and co-author of Self-Made Boss. Jackie's career spans executive roles at Square and Yahoo. And in 2022, Jackie bought a small Missouri community bank and turned it into Leadbank. Lead now powers fintech infrastructure while also actively supporting the crypto industry. Lead is also a key banking partner of BVNK's. Welcome to the show, Jackie. How are you?
I'm amazing. I can't complain, that's for sure.
Awesome. So good to see you again. Been a while.
Yeah, no, I know. Only if we were together, that would be better. But I don't know where you are today. I'm in Woodside, California. So it's always nice here.
Nice. I'm actually in Lake Tahoe for a couple of days, taking a few days off, spending some time at the lake. So pretty good. So
this doesn't look like taking time off, but I get your point.
Exactly. Yeah. We'll get there. Look, so excited to have you on today. Generally, how we start these things off is we kick off with a few quick fire questions to get us going. The only real rule is to keep the answers brief. You can do a yes or no or a single sentence answer if you need to. So this is an opportunity for you to give us your hot takes. No explanation needed. Are you ready?
All right, good. Can I be controversial and
The more controversial and spicy, the better.
All right, good.
Cool. Is banking infrastructure more or less complicated than most people think?
1,000% more complicated.
Is the phrase move fast and break things compatible with running an FDIC insured bank?
Disaster. Absolute disaster. It's like couldn't be the more opposite of what needs to be done.
True or false? There was widespread debanking of legitimate crypto businesses in the US.
Bullshit wasn't one of those options, but bullshit it is. We'll come back to that, I hope.
We'll come back to that, I'm sure. Do you think the average American will hold stablecoins in their digital wallet by 2035?
Yes.
True or false? Most banking executives still don't understand the difference between Bitcoin and stablecoins.
Oh, yes. Yes.
Are stablecoins a threat or an opportunity for traditional banks?
Both. Depends how they operate.
And finally, you can have a few words for this one. If you could instantly change one banking regulation with a magic wand, which one would it be?
Oh, the Community Reinvestment Act, CRA, which is completely illogical in the world of digital banking that we've been in for like the last 15 years. Totally illogical.
Awesome. Well, we should definitely get that one changed if we could.
I wish.
Awesome. Thanks so much for that. I think we got everyone awake and kicking. Look,
I know what topic you're going to want to go back to, but
yeah, definitely. One thing that we figured out, that we see across your career is that you remain constant in being a champion of small businesses. Can you talk me through about how that kind of played out, how that came to be, and what brought you to where you are today?
Yeah, and I actually think your question about whether banks survive the future, I think this is a really important one because we do need banks across the country to operate and make communities thrive. I don't think communities can thrive without them, but I grew up behind the counter of a retail pharmacy. My mom ran a chain of retail pharmacies. My dad ran medical supply business, and I grew up seeing my parents work 7 days a week on holidays and really being pillars of the community when people needed help. They'd call my mom and get a prescription filled. They'd call my dad and have a liquid oxygen delivery. And I think when you work with your parents growing up, ordinary course behavior by osmosis, you learn things like customer service. Watching my parents be there and respond to customers or respond to difficult people, how they respond, what they say. You learn about new products. In the case of my parents, it might be, going to a candy show and seeing like some funny new candy launched, but they wanted it at the counter of a retail pharmacy. but like watching what resonated and how customers responded and what converted, something I understood as a kid, and we would have funny conversations at dinner about. And then the last would be the care of an owner. And even though the first two are pillars of the way that we operate, our operating principles at Lead, I care a lot as an owner, and I'd want the people who work for me to think like an owner. And when you own your own business, you might be organizing the greeting cards, or you might be meeting a customer at their house, but you really go above and beyond for what's needed for people. And I think that's something that's so critical in the way we operate, even though we work with some of the most sophisticated clients in the world. We want to show up for them. If we make a mistake, we want to own it. If, we're good people, we want them to appreciate that we're like humans behind these decisions, and they can easily connect with us, even though a lot of our products are technology based. And so, I like to run my company where people can find us and feel like they can speak to people and make logical decisions with us in a way that helps them build their own business.
No, I mean,
Book called Self-Made Boss. It's unrelated to this podcast, but I wrote it because I was worried about small businesses coming out of COVID. And this is why I feel so strongly about the banking industry. I think at that moment in time, we realized how important our neighborhoods were that we live in. And we want our neighborhoods to thrive. We want local businesses where we could buy food for our kids and have fun and go to cafes. And little companies, the owners are really smart. They just don't always have the tools to operate. And so I want to see communities thrive. And I felt inspired by what happened in COVID and that fear over watching, the hair salon and the movie theater have struggles. And I love my community. My little town of Woodside is so cool and fun, and I want to see it thrive.
Awesome. Now, I mean, look, those operating principles that you run Lead with, definitely resonate. And, BVNK has definitely been on the receiving end of that great customer service. So long may it continue.
Yeah, I hope so. And even,
Sure.
I think we're a pretty innovative company. We're customer first. We think like owners. And, some of the biggest challenges we face are where we make mistakes, and we'll figure out a way to make it right for people and to be good citizens behind that. And I think that's what really stretches you as a company, is how you show up for people. And I do think we're creating incredible technology for people. And we do it with clients in mind so that we could support what they want. So I hope so. If we don't, you can come complain to me. But I get a lot of complaints all the time, but I get a lot of thanks and appreciation as well.
Awesome. Look, I think, right off the bat, we mentioned one of those spicy takes earlier on, but, I wanted to kind of start off by by talking about kind of Lead's relationship with the crypto industry. It wasn't too long ago that, we heard this term Chokepoint 2.0 and this idea of widespread debanking of the crypto industry in the US at the behest of, what seems to have been regulators. I guess, there's been a lot of talk about this Operation Chokepoint 2.0. But yeah, kind of, I know you have specific takes on this. What's your take, and how's Lead really been leaning in and leading the way with banking the crypto industry?
I'm going to put the SEC from the last administration aside, because I think that is an extreme anomaly, and just focus on banking and connectivity with the Federal Reserve. And I would say, this idea, I think, is more of a metaphor around early learnings from many of these companies, and also early philosophy of many in the crypto space, because I do think they were incompatible as the industry was evolving and scaling. And so I do think we had hit this moment in time, 2016 to 2020, where it was an evolution of scale and learning. And I can remember many dinners with members of Congress where they sounded like libertarian think tanks around, like, how do we not need to follow the law? And I would sit there incomprehensibly as someone who had worked in a regulated company and say, like, I don't think that's the strategy, pursuing this idea that you don't want to follow the law in the United States. And so I think the industry grew up very quickly with some of the challenges around Silvergate and Signature. And that became a moment when people realized that they needed the connectivity to the existing financial rails in the United States. And so we saw three different types of companies that were connecting from the industry. We saw amazing companies, and you could think of like the big public companies. These are companies, they had big banking relationships that existed and persisted through the perceived choke point. They might not have had every relationship they wanted, but 100% of them had banking relationships across the United States. And so they weren't choked out of mainstream banks. The second point is you had scaling companies, and these were companies that were trying to grow as fast as possible, trying to release products as fast as possible, and they made a lot of mistakes. And these companies had to evolve with the banking industry because they were scaling their own policies, their own products, while concurrently trying to operate in a highly regulated industry where mistakes in a lot of cases around moving money can't be tolerated. The level of precision required for banking is super tight and should be, because you are moving people's money and holding people's money. There's no tolerance for like, oops, I lost your money. Sorry, I'll find it tomorrow. And so those scaling companies, a lot of them had to reaffirm their banking relationships because in some cases they made mistakes, they didn't have policies, and there were some institutions that they worked with that just didn't have the experience to work with them. And so you saw some of those companies get moved from one banking relationship to another because banks in some cases didn't have the knowledge, didn't have the technology, didn't have the experience, or didn't have the depth of relationships in such a way that it was worth their while to keep those relationships. Now, where those companies were asked to leave, was that wide scale debanking? I don't think so. I think that's like a time and place for companies that were scaling, where this intersection of lack of experience on the banking side, pressure from regulators to, manage reputational risk, manage their own stability, and then the where these companies were at was just incompatible. And then you have a third category of companies, and they still exist today. They're just philosophically against banking law. And I don't know how to bank those companies in the United States. But that is a smaller and smaller group of companies that exist today, because largely the ones that are scaling realize that the best crypto companies are the ones that figure out how to operate with strong compliance, but compliance that works for the type of company they have. And, they need enablers like lead who help them grow, not don't understand their products or don't help them scale. And so I do think those kinds of relationships exist today. I know that we certainly have done it for the last few years. But that's what I think happened. And I don't think it's true that there was this wide scale debanking. I think there are themes around that and subcategories of companies that really need to be unpacked in order to truly understand what happened over the last few years.
Yeah. No, I think, exactly that. You definitely need, as a crypto company, building in the space, need that, connective tissue or interoperability back with the fiat system. Otherwise, you can't actually get this technology to scale. So definitely resonates. I mean, I think
we still see companies that, don't want to do the work to make themselves amazing. And the ones that we see really scale are the ones that invest in understanding that they need to assure clients about the strength of their capabilities and the strength of their compliance. Yeah. And so they lean into it, albeit with technology and good judgment around it, not, leaning out. And so I think that's the differentiating point today with companies like you.
No, definitely. I mean, you've been at this forefront of building kind of a tech first bank over the last few years, but you spent a bunch of time at Square, and I've heard you say in the past, you're building the bank you wish you had at Square. What are some of the specific pain points from your Square experience that you're starting to solve today with fintechs and crypto companies, by using tech first and and bringing that into kind of an old world industry?
Yeah, there are a few points. First, our colleagues understand the products that we're banking. I think that was something we didn't completely feel when we were at Square, that you might have a general counsel or a relationship person that understood what you were launching, but you go deeper in the compliance team or deeper into enterprise risk or the finance team, and you have to explain what you do and then re-explain it. That worries me for a lot of reasons. It worries me because I'm not sure the bank understands the risks associated with it. And it worries me because they have a relationship with regulators. And I would worry about how they're explaining our products to regulators when we were on the cutting edge of products that we were creating. I wanted to know I had the smartest people who understood from top to bottom what we were doing. And I feel like that's something that we took to heart. And from top to bottom, we have colleagues that can explain our clients' products. And then the second thing is we wanted to incorporate technology in the products so that technology could work for our clients and de-risk a lot of their products, in addition to standard human compliance interaction. You know, we wanted anomaly detections and we wanted data science systems so that we didn't have to repeat a lot of the daily activity that we had with one person. We wanted it persistent across the entire banking relationship. And so we built tools and automation from a compliance point of view, from an onboarding point of view, from a systems point of view that allow us to have tooling that makes the relationship more consistent and enables us as a bank to be able to deal with what we need to on the back end, deal with what we need to from a regulatory point of view without pestering our clients. Like, it used to drive me crazy that at the end of a month, our banking partners would ask us, you know, how many loans did we issue or how many payments did we issue? And I'd say, like, I think that's your data. Like, why are you asking me data that actually you technically own? It doesn't make any sense, and it would make me bonkers. And then when they had audits and you know, these one-off regulatory reviews, they would take weeks of my time, and I felt like it was a waste of my time when that should be something that they own as a process. So we made sure we got rid of all of that from a relationship point of view. And then I don't want to have to explain things 1,000 times over. It makes me crazy that you don't have consistent pods of teams.
Yeah.
And so I still get emotional. I think you could probably hear it in my voice, but I want to have great systems. I want to have smart people. I want to know that they can work with regulators and they do a great job with that. And I want to know who the person is who's representing me at the FDIC, at the Fed, at the OCC, and they better be damn smart about what it is that I do. Otherwise, I don't want to work with them.
No, I mean, 100%. I mean, we've seen this play out where you spend a bunch of time with banks at the cutting edge of launching new products and not having someone sit across the table from you that actually deeply understands the product. And then, as you said, is actually your representative to their regulator. They can help you move these things along. So putting smart people in those positions that understand these new products top to bottom, I think is a key differentiator for sure.
One of the things I think we've done in crypto is that I think we understand the products extremely well. And we've been able to build systems around our products and then communicate from top to bottom to regulators over the last few years so that if someone's going to launch something new, we can explain it and we can help bring regulators up to speed in something that's super complex. And I think we do it in a way that brings them along so that it's not a surprise later on, or that I feel like the people who we work with understand what it is that we're doing and understand the risks we're taking, even if we present risks in a way that's really proactive, because we want them to understand, like, look, these are the trade-offs. Here's the way I think about it. Here's the risk I'm really worried about. And, you know, oftentimes with crypto, for example, that could be things like liquidity. Like, you all move a massive amount of money and you're moving a 24/7, 365. Like, I want to say, like, look, this might be something I'm worried about. I want you to understand, like, this is what we're building. It's not up and running yet, but here's the way we're thinking about it with our clients and why I think it makes sense. And when you bring regulators along with that kind of understanding, I think it supports companies like yours that are absolutely on the cutting edge. And it gives comfort to your clients that, like, you work with partners who aren't a risk for you. And the regulators know that like we're honest and open about like the oh shoot moments, like, oh, I got to worry about this. It just makes for a better, smarter relationship when you're super open about like the things you're worried about. Like, I'm not scared to walk into DC and say like, oh my God, I think this might be something we should worry about. Can I tell you what I think we might build? But I'd like to get your point of view on it. And I see that around multinational money movement or some of the new stablecoin work that needs to be done around settlement times and how settlement happens, or how money moves in and out of the country, and bankruptcy issues around Genius Act. Like, we're dealing with thorny issues that aren't quite settled yet. And if we understand those issues and can work with you on them, you have the assurance that we know what we're doing, even if we don't there's something you need to explain to us, or we're going forward, but at least we can go through it with like this open mindset and go explain it to regulators so that we all feel good about where things stand.
No, 100%. And I mean, I think that's actually a great segue into the second topic around kind of stablecoins and the Genius Act. I mean, I think, what we've seen from our perspective, post, Genius, but even leading up to the Genius Act, looking like it would pass, we saw a flurry of activity, and arguably you've seen regulatory headwinds turn into tailwinds in the US.
Yeah.
So, and it's quite an exciting time, for stablecoins in the US more broadly. But, how have you thought about the Genius? I know you were spending a bunch of time in DC thinking through some of these things and spinning and speaking in the right circle. So maybe just your perspective on Genius and what this kind of means for the US stablecoin industry.
Yeah. I mean, I was involved with lawmakers behind the scenes and felt like I was one of the only banks as a voice behind that law. Same with the Clarity Act. And, not always as the raw advocate on the crypto side, because in some cases, to the point we mentioned early on, I want to see the long-term stability of the banking and financial services industry. And that doesn't always align with like, we want everything and we want it now as a philosophy. And so I do have moments of hesitation around what happens to community banks around money movement. And I don't see an environment where instantly a community bank is going to go launch their own stablecoin. And I think it'll be this 10-year evolution where products get launched between companies like yours, and then it seeps its way into banking, where banks like us are at the forefront of building infrastructure with you all. But in some cases, I don't think we can have every institution participating in the industry. And we need to have a learning process and an evolution process around those companies that are most familiar with it, building first. And then even like some of the banking institutions that, build infrastructure for banks themselves, like an FIS or a Fiserv, that might build wallets for banks. But I don't think that technology is something that should be launched instantly. I think we're a long way away from, every bank wanting to have a stable coin. But I do think you'll have companies like yourself at the forefront of this, companies like us, where we're deeply involved in building the payment system around stable coins. And then we're focused on like, how do you manage stablecoin reserves? And so we have a stablecoin reserve product that we work with companies on. But even that, like, there's still thorny issues around liquidity timing and how that happens between large banks and small banks. And so there is this evolution of how that will happen over the next 3 to 5 years. I do think like the Genius Act was incredibly helpful to at least put clarity around, who's a permitted issuer, what kind of disclosure requirements are there for reserves. And it gives comfort to corporate institutions that work now with stablecoins behind the scenes as a rail, that the laws are in place to at least define, what kind of reserves are there, how are they held, what's the regulatory structure, how does anti-money laundering happen, how do you deal with bankruptcy law? And I think that kind of structure sets the tone and the stage for a broader set of institutions to want to work with stablecoins as a payment rail.
Yeah. No, I think you're 100% correct. That kind of like, you first get the rules and a clear kind of, clear rules of the road. Then you get some early adopters to take it, show what kind of product can be built on top. Take, I guess, the first iteration of learnings, because those are super important when any new piece of legislation comes out. And then basically build products on top. And then there's more of a clear roadmap. And as you said, maybe there are some infrastructure providers that start offering services to that second tier of banks who want to start adopting it. And then the innovation and new products can be built on top of the rails and the infrastructure, which I think is quite exciting. And we're actually seeing that in our pipeline as well. We're seeing some early conversations with, not only US domestic banks, but, emerging market banks who've struggled maybe to get access to the correspondent banking system and just general US dollar liquidity, and looking at stablecoins quite keenly to say, look, could this solve some of that problem for me? But if I do this, at least I know there's clear rules in the US on how to interact with this. At least sets a precedent for me as an offshore bank,
Yeah.
So yeah.
And I think it became something that brought it top of mind, where you'd have boardrooms saying, should we do something with stable coins? And while the answer might be no in a lot of cases, whether that be banks or regular companies, for a lot of companies, maybe they'd say like, oh, wait a minute, that infrastructure is kind of interesting because I have the following use case problem around multinational money movement. And at least they find the first use case to start with, as opposed to it being this like scary broad issue where no one knows where to put it first. They can pinpoint, wait a minute, multinational money movement where I need to do X to Y. I think I'm going to use that. And I now see that it's legally defined. I'm going to explore that as my one treasury issue around payments. And that feels like the change that's happened in the last 6 months, where now a company might be exploring it for a particular use case. And then that will eventually open the aperture. But I don't see it as like a free for all, where all of a sudden everyone's saying, to your quick question early on, like, I'm not going to have a stable coin in my wallet as your average, pharmacy in Margate, New Jersey, where I'm from. That's just not relevant today. But if I'm a multinational company, I might want it in order to move money in some particular way that might be a really painful process today.
No, 100%, 100%. Look, I think we're coming up on time, and it's been a great conversation. But I really want to, leave you with one closing question. You've said that you want Lead Bank to be the primitive of banking with the speed and agility of tech. What does the bank of the future look like to you in 2030?
Well, most of the banking infrastructure in the United States is over 50 years old. And I think the future-looking bank from a consumer point of view will probably look much better from a customer experience point of view, in the sense that settlements will be quicker, ease of use to do all kinds of transactions that today are very complicated, moving money from bank to bank. I think people will have a lot of banking relationships where they'll do things, for example, like chasing yield. They'll move money in and out of accounts more fluidly. They'll wire money more fluidly. And so I think that consumer experience will look dramatically better. I think on the back end, the ease of settlement and the ease of relationships will be night and day different, because the financial infrastructure that we have today is very old. And even the separation of like where I store money, where I move money, where I invest money is very different today. I think you'll see an intersection of that from both an infrastructure and a consumer point of view. And so I'm pretty excited about what that looks like.
Amazing. Jackie, this has been an absolute blast. Thank you so much for joining us today.
Thank you. Good to see you.
Cool. Likewise. Ciao.